Hello everyone, welcome to Simple Trade Club. In this video, we will talk about the easy trading view strategy using Heiken Ashi Smooth Candle. But before we start, you can click subscribe button below and you will get notification when we upload a new video. Now, let's get started. Heiken Ashi Smooth Candle. The Heiken Ashi Smooth Indicator is a modified version of the regular Heiken Ashi candlestick charts. The Heiken Ashi is a type of chart used to analyze the price of a stock or currency. It belongs to the family of candlestick charts and was imported to the West from Japan. Unlike the regular candlestick charts, the Heiken Ashi candlesticks are used to understand the price trends. This is done due to the way the price is calculated and displayed on the chart. Unlike the regular candlestick chart, which shows the open, high, low, and close of the price during a session, the Heiken Ashi chart takes a different view. How to install the indicator? We are using Tradingview to combine this indicator. Go to tradingview.com or you can click link in description below and sign up for a free account. In free account, you can get access up to 3 indicator for free. Now, go to product and you will see the market chart, click on it. Choose a currency pair and set the time frame to 1 hour. Click on Indicator, search for Heiken Ashi Smooth Candle. Click on it. Click on Indicator, search for ATR Stop Loss Finder. Click on it. Your chart will look like this. The rule of Heiken Ashi Smooth Candle. We will look for the Heiken Ashi Smooth Candle indicator. If the Heiken Ashi Smooth Candle color is green, go for buy or long transaction. If the Heiken Ashi Smooth Candle color is red, go for sell or short transaction. Now you can see in the chart. The Heiken Ashi Smooth Candle color is red. When the Heiken Ashi Smooth Candle color change from red to green, go for buy or long transaction. Set the stop loss to the bottom of the ATR Stop Loss Finder. Set the take profit 1.5 times, so we are using 1 to 1.5 risk-reward ratio. Let's see now. This trade hit the take profit. Now you can see in the chart. The Heiken Ashi Smooth Candle color is green. When the Heiken Ashi Smooth Candle color change from green to red, go for sell or short transaction. Set the stop loss to the top of the ATR Stop Loss Finder. Set the take profit 1.5 times, so we are using 1 to 1.5 risk-reward ratio. Let's see now. This trade hit the take profit. Backtesting Heiken Ashi Smooth Candle. Now let's test the Heiken Ashi Smooth Candle for 100 times trade. The starting balance of this test is $1,000. We will use 1 to 1.5 risk-reward ratio, with 1% of risk for single trade. If we loss, we will loss $10. And if it profit, we will get $15. We will do the test on Euro-USD with 1 hour time frame. Now let's get started. Before we discuss about the result, please support this video by giving like and subscribing to this channel. That will keep me motivated. Now, we can see the result of the Heiken Ashi smooth candle. The Heiken Ashi smooth candle has 53 profit trade and 47 loss trade. It means on 1 to 1.5 risk to reward ratio, the Heiken Ashi smooth candle has 53% of win rate. The consecutive profit is 5 trade in a row, and the consecutive loss is 4 in a row. The account start from $1,000 and end up at $1,325 with 32.5% account growth. Pros and cons. Now we want to tell you the pros and the cons of this indicator. The pros of using this indicator is, the indicator is very easy to use. The rule of using the Heiken Ashi smooth candle is simple and easy to understand. But the Heiken Ashi smooth candle is repaint indicator. You need to wait for full confirmation to enter the market. This strategy is not good on ranging or sideways area. For another strategy, you can check our other video in our channel. So that's all about the easy trading view strategy using Heiken Ashi smooth candle. I hope you can understand the content of the video and like the video. Please support this channel by giving a like and subscribing to this channel so we can develop in the future. See you in the next video.